Hey everyone, Andrew Gallegos, your loan officer here with New American Funding, making a quick video today to talk about the purchase of an investment property. So, rates are still historically low, which means mortgage money is still historically cheap. Wouldn't it be nice to buy an investment property? It's an appreciating asset because we've seen what's gone on in the Colorado market over the past few years. You'd have an appreciating asset and you'd also get some additional cash flow to pay yourself every month and just kind of contribute to that long-term financial plan. But what does it take? What does it look like? What are the requirements? So I just want to, obviously, anytime you're qualifying for a new mortgage, there's a lot of nooks and crannies and there's a lot of things that go into it. But I just kind of wanted to highlight 3 guidelines that make investment property purchases a little different. So the first one is the down payment is going to be higher if you purchase an investment property. You're required to at least put 20% down. Now, 25% down is kind of that sweet spot because you get a big rate benefit at putting that extra 5% down, but 20% down is the minimum. So that's the first thing. The second thing is your interest rate is going to be quite a bit higher on an investment property purchase compared to the purchase of a primary home, typically about 3/4 of a point higher in interest rate. The third thing I wanted to point out is there's a reserve requirement when you're buying an investment property, meaning in addition to your down payment and closing costs, you have to show 3 to 6 months worth of reserves saved up in, it can be checking, savings, or retirement accounts, showing that you've got a few months worth of your monthly payment on the new property saved up in reserves. That's part of the approval process there. So those are just a few things. If you have any questions about that, let me know. Another way to kind of build an investment portfolio would be to purchase another property as your primary residence, so you get the down payment flexibility, you get the great interest rate there on the primary purchase, and then you can turn your current house into an investment property. If you do that, you get to keep your hopefully low interest rate on the current property that you already have, and again, not take that rate hit on the next property and not have to put that 20% down on the next property. So that's an option as well. So again, if you have any questions about any of that, or if you're in a situation where you're looking at building your real estate portfolio, let me know, and I'd love to give you any advice that I can. Thanks so much. Have a good day.